This is its financial history too, where money's past reveals tomorrow's truth. Every major market crash in the last 100 years has followed the same hidden formula. And the richest investors on earth have quietly positioned themselves exactly the same way every single time. 3 moves, 3 trades, executed before every crash. And right now, in 2025, those same trades are happening again. Welcome to the It's Financial History to History doesn't repeat itself. But in the financial world, it absolutely rhymes. In 1929, Joseph Kennedy made 3 precise moves just months before the Great Crash. He converted everything to cash, bought gold, and positioned for volatility. While the market collapsed 89%, Kennedy walked away with $50 million. In 1987, Paul Tudor Jones made the exact same 3 moves. On Black Monday, the worst single-day crash in history, he made $100 million in 24 hours. In 2008, Michael Burry, John Paulson, and others repeated the same pattern. Cash, gold, volatility. Result? Tens of billions in profit while the global financial system melted down. And now, in 2025, the world's biggest investors, Warren Buffett, Ray Dalio, Bill Ackman, are making those same 3 moves again. Not 2, not 5, exactly 3. This isn't luck. It's not intuition. It's a mechanical pattern that appears before every major crash. Why? Because crashes follow a predictable sequence. Extreme valuations, excessive leverage. A triggering event, forced liquidation panic. And the few investors who recognize that sequence always position themselves with the same 3 trades. Today, I'll break down these moves, how they worked in 1929, 1987, 2008, and why they're appearing again right now in 2025. Because you're standing at a crossroads. Ignore the pattern and lose 30 to 50% like most people will, or understand the cycle and position yourself before it's too late. The 3 trades, the pattern of the elite trade 1, convert to cash. This is the recognition phase, the moment the smartest money realizes valuations no longer make sense. 1929 Kennedy quietly sold across the summer, moving into cash before the October collapse. 1987 Paul Tudor Jones reduced exposure in August and September, predicting an October crash with shocking accuracy. 2008 Burry, Paulson, and even Warren Buffett raised cash 12 to 24 months before the market fell. 2025 Buffett is now holding $325 billion in cash, the largest hoard in corporate history. Bezos, Zuckerberg, Jamie Dimon, massive insider selling. Smart money is leaving the table. Trade 1 is already happening. Trade 2, accumulate gold. Cash protects you. Gold preserves your purchasing power. 1929 to 1934 Baruch bought gold early. When Roosevelt devalued the dollar in 1934, gold holders saw a 69% gain overnight. 1987, gold spiked during the panic while stocks collapsed. 2008 to 2011, gold surged from $600 to $1,900 as the Fed printed trillions. 2025 central banks are now buying gold at record levels, over 3,000 tons in 3 years. Gold is hitting new all-time highs because global institutions see what's coming: currency devaluation, monetary intervention, another inflation wave. Trade 2 is fully underway. Trade 3, bet on volatility. This is where fortunes are made. 1929, Kennedy shorted stocks and multiplied his wealth. 1987, Paul Tudor Jones put positions exploded in value, the most perfectly timed volatility trade ever captured on camera. 2008, Burry and Paulson bought credit default swaps for pennies and made billions when subprime collapsed. 2025 hedge funds are now loading up on credit default swaps on commercial real estate, deep out of the money S and P puts. VIX call options. Commercial real estate is cracking. Regional banks are stressed, and volatility bets are spiking. Trade 3 is already being built. The mechanics of a crash, why the trades work. Every crash starts with the same fuel: overvaluation, overconfidence, over-leverage. Then a small trigger, a default, a failure, a shock, sets off the liquidation spiral. Forced selling triggers more selling. Panic accelerates. The VIX explodes. Liquidity evaporates. This is when cash protects you, gold preserves you, volatility makes you rich. The pattern has never failed. Where we are now, 2025. We are in the final 12 to 18 month window before the next major contraction. Cash levels among institutions are the highest since 2008. Central banks are buying gold faster than any time in modern history. Hedge funds are stacking volatility trades. The three signals are flashing red, exactly as they did before 1929, 1987, and 2008. If the pattern holds, the crash window is late 2025 to 2026. What you can do, most people can't execute the billionaire version of the trades, but you can still follow the simplified blueprint. 1. Raise cash, reduce equity exposure. Hold short-term T-bills or cash buffers. 2. Hold 5 to 10% in gold, physical gold, or allocated ETFs, not mining stocks. 3. Buy protection, simple SPY puts expiring 6 to 12 months out. Small cost. Large protection. Then comes the most important phase. The fourth trade: buy when everyone is terrified at the bottom. When unemployment spikes, headlines scream disaster, and quality stocks are down 50%, that's when the real wealth is made. Kennedy did it in the 1930s. Buffett did it in 2008. Ackman did it in 2020, and you can too. If you're positioned before the crash, not during it. History rewards preparation, not panic. Final word: the three trades aren't secret. They're not conspiracies. They're a century-long pattern that repeats because human behavior never changes. Cash, gold, volatility. All three are happening right now in 2025. The pattern is in motion. The window is closing. Choose whether you ignore it or prepare for it. Call to action, rewritten and polished. If this video opened your eyes to the pattern behind every major crash, hit the like button. It helps more people see the truth. And subscribe to the channel, because over the next 12 to 18 months, I'll track every insider sale, every gold purchase, every volatility spike, and every signal that tells us the crash is getting closer. Stay alert, stay prepared, and stay ahead of the cycle.